it's interesting that we were watching these markets through getting ready for the daily brief today. And of course, I think I had my meeting with the team around here. So I didn't really pay too much attention, but, came back out of the meeting. It was interesting to see how they actually set up a nice FU move. Keep in mind that European close is right there. So they kind of tricked people. And if anything, this happens a lot, folks. I mean, a lot. So much that if you do fancy yourself a day trader or an aspiring day trader, you really should just understand this. And I've fallen into this trap before, too. Notice how they paint this M. It's not a very pretty M, but they painted into this European close. What you have to ask yourself is this maybe a little bit suspicious? And why is the market coming down here? Well, it's probably because the stock market itself enjoyed a pretty nice overnight rally. The Europeans, of course, they come online right around here. So we have to ask ourselves, what are on balance? Are the Europeans, are they long or are they short? You can clearly see through the latter part of the evening into early morning, especially after the New York Open, there was a pretty sizable push to the upside. So you have to kind of expect that when these guys, especially if you're a day trader, you have to have your position out. So, right, you can open up new positions here, but you've got to have them closed by the close of business. So what is going on with this price action here? And I might argue that this is literally the Europeans, they got to close out their position. So there's people are hitting the bid. But it's a trap. And then as soon as the European market closes, you notice it just zips straight back up. Like I had one gentleman in the day trader room who just said, you know what, I like it, I'm going to short right here. And I'm like, okay, but what are your reasons? And then he's sort of like, well, there's a potential this and a bit. And I'm like, that's not good enough. And sure enough, that was not a good trade idea. I was asking for trouble. I'd also say, too, like I said there a moment ago, you got to take today's price action with a huge grain of salt because it is a Fed day. A lot of people are probably sitting there going, I'm not doing anything until this damn Fed gets done. And this is a really cool analogy of a day trader's life, although I didn't do any day trading today. But wow, this was so cool. This was the New York Open here, right there, the Pit Open. And isn't this fascinating, right? This is why you can't just sit there and just assume it's going to happen and you're going to do fine. I think that there was a half decent short trade that came on that New York Open. And, I used to work with guys and, anybody who's taking the level 3 program, of course, you see my trading plan from when I was a prop trader. They would just probably say something like, hey, I'm going to buy on a break above this range. What we used to do is like the 3 minutes before the open. It's something along those lines there. Right, I'm going to sell on a break of that range. I think it's pretty straightforward. So ding, 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 opening bell, and the market right out of the gate tanks. And then, interestingly enough, by the end of the candle, they brought it right back to where they started. But look at this move. So, here's a really good example where you could have shorted the fail on that 95.98, right? You would have been like, woo, look how smart I am. Oh, I don't know. Oh, now I'm underwater. Oh, gee, now what am I going to do? Remember, if you're going to put a trade on, you better know exactly where you're going to enter. So that's that level right there. Where you're going to risk to. So that's that level right there. And then, of course, what are your profit objectives? Interesting with this one, had I been trading it, I would have said something like, let's go short there. Let's risk to a break up top there. I would have liked to have had 3 contracts on. So the very first contract, I want to let go at 2-to-1 risk reward. So interesting, through that first candle, you would have been like, woo, I'm so smart. Uh-oh. Well, now I'm back to nothing. And then the next candle, it actually goes down and almost hits your objective. Boom. Okay, next objective. There's it. Actually, 205. Let's go 2 even. Anyway, so right in there. But this is a fascinating one because it actually, I mean, gee whiz, look how far it went. 7.7 risk reward had you like hit the offer there. I mean, I don't know whether you could have like realistically said, yes, I'm gonna my target is 94.31. I'm gonna be selling there, take 8 to 1, blah blah blah, whatever. My hunch is probably something along these lines. As we were coming into Foggenbaum's here, and we hit the standard deviation, the second band of the VWAP here, anywhere down in here, I would have been like, this is crazy. I mean, wow, what a trade. That would be like a, keep in mind, look at these numbers, right? That's 96, and these numbers here are 94 and change. That's like, on the big boy, that's about $1,200, $1,300 a contract. That's some serious money. In like what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 minutes. Well, talk about high octane trading. But isn't this incredible? So they did this trade. And what's fascinating is if you actually look at the momentum signals down here, everything started to turn back up. And we actually had Willie. Yeah, Willie even got stupidly oversold. So you could make the argument. It would have been difficult while I was watching it. I was like, well, that's kind of interesting. You're below standard deviation band. You're below 2.618. You got the indicators all starting to turn back up here. I would call this more like Davo signals, WWW. And of course, there's the W in price. And then you're heading all the way right back up. Now, the person who just put on the blind, okay, well, I'm going to short the opening range and I'm just going to leave it and let it work. They actually came back and they stopped them out. And that, my friends, is a very typical of a Fed day where nothing is sacred. They wash both sides. Anybody who was long all through here, feeling great, awesome, they just totally busted their chops. And then, ironically enough, anybody who was short off a year, they just did exactly the same going the other direction. Quite remarkable, really. I think this is a very good analogy of a Fed day kind of market state.